As we stand right now, the market for B2Gold Corp, trading under the ticker BTG on the NYSE American, has just wrapped up a session where it closed at $5.54. That represents a drop of 23 cents, or roughly 3.99% for the day. While most traders were looking at the screen wondering why a senior gold producer is slipping while gold itself has been flirting with record territory near $5,000 an ounce, the smart players were digging into the volume. We saw over 65 million shares change hands today, which is massive compared to the average. This isn't just retail jitters, this is institutional positioning ahead of the February earnings call. The immediate thing that probably hits you when looking at this $5.54 price point is the sheer disconnect. You see the massive rally in gold prices and you expect every mining stock to be vertical. But here is the piece of reality the market hasn't fully digested yet. B2Gold is currently in a high-stakes transition from being a mostly West African producer to a diversified global giant. Most people look at the ticker and see a safe gold play, but the real story is about the massive capital expenditures at the Goose project in Canada. They just declared commercial production there in late 2025, and the market is currently punishing them for the high costs associated with that ramp-up, rather than rewarding them for the massive future ounces. This creates a fascinating tension because the expectation is that gold miners should follow the metal perfectly, but the reality is that BTG is being traded like a construction company that just finished its biggest project ever and is now waiting for the first paycheck to clear. If you've been looking for investment help or exploring different investing sites to figure out where the smart money is going, you've likely noticed a trend. People are moving away from the high-flying tech names like Tesla stock or Nvidia stock for a moment to find value in the dirt. It's a classic rotation. Even if you're using something like Schwab Intelligent Portfolios or a self-investing setup on a Fidelity mobile app, the signals for gold miners have been mixed. On one hand, you have soaring commodity prices. On the other, you have rising operational costs. Today's 4% drop in BTG is a perfect example of that friction. When you look at the Fidelity trading platform or scroll through your Robinhood investments, it's easy to get caught up in the daily red, but the volume tells us that someone is buying these dips. Large-scale individual brokerage accounts and institutional funds often use these sell-the-news moments to build positions while the average investor is distracted by a headline about Apple stock or the latest move in crypto. Let's look at why the stock moved the way it did today. We are seeing a significant amount of profit-taking across the sector, but B2Gold specifically is under the microscope because of its exposure to Mali. The Fekola mine is their crown jewel, and while they've reached a preliminary agreement with the Mali government to keep things running under the new mining code, the market is still pricing in a geopolitical discount. This is the classic gap between expectation and reality. The expectation is that Africa is too risky. The reality is that BTG has been operating there successfully for years, and Fekola continues to exceed production targets. When you're doing your online investing through something like Interactive Brokers Trading or checking your SoFi active investing account, you have to weigh that risk. Is a 4% drop today justified by a risk that has existed for a decade? Probably not. It's more likely that we're seeing a consolidation after the stock hit a 52-week high of $5.94 recently. Speaking of those platforms, I'm curious to know how you all are playing this. Comment below how many shares of B2Gold you currently hold, or if you're looking to start a position at these levels. It's always interesting to see if people are using their Fidelity brokerage or Robinhood app to go long on miners right now. The logic behind the current price action ties back to the broader macroeconomic environment. We are in a period where the Federal Reserve's moves are making self-investing a bit more of a challenge. If you're using a SoFi robo-advisor or an intelligent portfolio, you might be seeing your gold exposure limited. But for those doing active online investment, the opportunity is in the individual names. BTG isn't just a pile of gold in the ground, it's a cash flow machine that pays a dividend, a rarity in the mining space. They've managed to maintain a quarterly dividend of 4 cents per share, which at a $5.54 stock price gives you a yield that beats many of the safe bonds you'd find through Fidelity Wealth Management. Now, let's step back and look at what this company actually does, because a lot of people just see gold and move on. B2Gold is a senior gold producer based in Vancouver. They have 3 main operating mines: Fekola in Mali, Masbate in the Philippines, and Otjikoto in Namibia. But the game changer, and I use that term loosely to describe their shift, is the Goose mine in Nunavut, Canada. This is part of the Back River Gold District. They bought this project through an acquisition of Sabina Gold and Silver, and they've spent the last 2 years and hundreds of millions of dollars building it in one of the harshest environments on Earth. This is why their cash flow looked a bit strained in 2024 and 2025. They were building. Now, in 2026, we are entering the period where that investment starts to pay off. They are expecting about 300,000 ounces of gold per year from Goose over the next several years. When you combine that with the million ounces they already produce, you're looking at a company that is moving into a new tier of production. The history of B2Gold is actually quite impressive. The leadership team comes from B2Gold, which was sold to Kinross years ago. They know how to build mines, and they know how to navigate difficult jurisdictions. This is the reality that long-term investors on Interactive Brokers or Fidelity Investments are betting on. They're not just looking at the price of gold on a Robinhood stock screen, they're looking at the management's ability to execute. But the market's expectation is often shorter term. People want to see the debt go down and the cash pile go up immediately. Because the Goose mine construction was expensive, the balance sheet took a temporary hit. That is what you're seeing reflected in the $5.54 price. It's a show-me price. The market is saying, show us the first full year of production from Goose, and then we'll give you the $7 or $8 price target. When you're using a Robinhood cash management account or managing Fidelity IRAs, you're usually looking for stability. B2Gold offers that through diversification. If something goes wrong in Mali, they now have Canada. If the Philippines changes their tax laws, they have Namibia. This geographical spread is why BTG is often a top pick for those using a SoFi trading platform or looking for the best investing sites for mining stocks. It's a way to play gold without the single mine risk that kills junior miners. Let's talk about the future outlook, because that's where the tension between expectation and reality really gets interesting. The expectation is that B2Gold will just be another miner. The reality is that they are positioned to become one of the lowest cost producers in the world as Goose ramps up. Their AISCs have been around $1,400 to $1,500 an ounce. With gold at $5,000, that's an insane margin. We are talking about $3,500 of profit per ounce. Even if costs rise to $1,800 due to inflation, the free cash flow generation at these metal prices is going to be astronomical. This is something that isn't fully reflected in the current valuation. If you look at the PE ratio or the price to cash flow on your Interactive Brokers account or through Fidelity trading tools, you'll see that BTG is trading at a significant discount to peers like Agnico Eagle or Barrick. The catalysts for 2026 are clear. First, we have the earnings release on February 18th. This will be the first time management gives a full year guidance that includes a steady state Goose mine. If they guide for higher production and lower costs than the street expects, that $5.54 price is going to look like a bargain very quickly. Second, we have the ongoing exploration at the Fekola complex. They're finding more gold in the Fekola regional area, which could extend the life of that mine by another decade. Third, there's the Gramalote project in Colombia. They recently took full control of it, and a new feasibility study is expected soon. This could be their next major project for the late 2020s. Of course, there are risks. There always are in mining. If gold prices suddenly retreat from these record highs, every miner will get hit. If there's a major operational hiccup at Goose, like a processing plant failure in the freezing Arctic, the stock will suffer. But that's the reality of the business. The expectation is that everything should go perfectly. The reality is that mining is hard. But for those who have been self-investing for a while, these are the types of quality risks worth taking. Whether you're buying Robinhood fractional shares or building a massive position through Interactive Brokers stock trading, the key is understanding the difference between a temporary price dip and a fundamental change in the business. Today's 4.9% drop feels very much like the former. To wrap this up, let's look at the central insights. The expectation was that B2Gold would soar along with gold prices. The reality is that the heavy costs of completing the Goose mine and the geopolitical noise in Mali have kept a lid on the stock. Today's drop to $5.54 is a reflection of that lingering skepticism and some standard profit-taking after a strong run in January. However, the underlying fundamentals tell a different story. We have a company that has successfully transitioned to be